Nvidia, the undisputed leader of the AI chip boom, is about to report second quarter earnings. But there's a big cloud over Wall Street, a projected $8 billion hit tied to US export restrictions to China. This isn't just about one company. It could ripple across chip ETFs and global markets. Let's start with the policy backdrop. In April, a ban on chip exports to China. By July, it was repealed. Then in August, a new 15% tariff was imposed. That back and forth has rattled investors. China remains one of Nvidia's largest markets. AI demand is booming globally. But how sustainable is growth if a major customer base faces tariffs and restrictions? Investors are watching whether policy uncertainty will blunt Nvidia's momentum. Let's get into the numbers. Management warned of a potential impact, and that brings us to the $8 billion figure. How big is that relative to Nvidia's fortunes? Next, the push and pull that defines the stock right now. On its last earnings call, Nvidia management warned export restrictions could cost the company $8 billion. That's a staggering figure, and investors will be laser-focused on Wednesday's report to confirm or soften that outlook. At the same time, Nvidia's data center business remains a massive growth engine. This quarter, it's projected at $41.2 billion, a core driver of earnings. So you have unstoppable AI demand on one side, unpredictable geopolitics on the other. That tension is what's setting the stock's narrative heading into earnings. Expect heavy attention on guidance and any mention of China exposure. Now let's look at how this flows through ETFs and options. Nvidia's weighting matters beyond just its share price. Nvidia isn't just a stock, it's the largest holding in several major ETFs. In VanEck SMH it's over 20%. In iShares SOSX it's over 15%. That concentration means if Nvidia disappoints, these ETFs could slide sharply. Because ETFs are widely held by retail and institutions, the effect can be magnified across markets. The options market is already pricing in huge volatility. Traders are bracing for a possible $260 billion swing in Nvidia's market cap after earnings. A move like that could shake chip ETFs and broader tech funds like QQQ, so all eyes are on Wednesday's results. Positioning in options and ETF flows could amplify any surprise. Next, the ripple effects across other chip makers. Nvidia sets the tone for the entire chip industry. If earnings show China weakness, investors could rotate out of AMD, Broadcom and Marvell. On the flip side, chip makers with stronger US footprints like Intel might benefit. Sentiment could rapidly reprice winners and losers across the sector. So where does that leave us? Nvidia remains the face of the AI revolution with unmatched GPU dominance. But trade uncertainty and heavy ETF concentration make it a risk hotspot. For investors, the next earnings call could be make or break. AI strength versus China tariffs. What do you think? Will Nvidia surprise to the upside, or are we headed for a semiconductor correction? Drop your thoughts in the comments. Don't forget to like, subscribe, and hit the bell for more in-depth market breakdowns.